Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities look set for a positive start in the fresh week after the sell-off that we saw on Friday. SGX Nifty indicates a mildly positive start for Indian equities after a big fall on Friday, right? HDFC Twins essentially dragged the benchmarks lower. But if you talk about the overnight cues that we had on Friday, Dow Jones had a best day since Jan 6th on Friday after Apple shares rallied and encouraging jobs data. Well, Warren Buffett, Berkshire Hathaway dumps billions of dollars of US stocks out there. Berkshire disclosed on Saturday that it had sold shares worth around $13.3 billion in the first quarter and has just managed to put in $4.4 billion towards repurchasing its own stocks and invested around $2.9 billion on the shares of other publicly traded business out there. With this, Berkshire's cash pile has risen to $130.6 billion, which is the highest level that we have at the end of 2021. In terms of what the regional shares are doing out there, the Asian markets, they've risen after US financial rebounded. In terms of the FII's data, they've bought in shares worth around 777 odd crore. And if you talk about the DIIs, they've been selling shares worth around 2,198 crore. So these are some of the cues that we have from the institutional trend out there. In terms of bunch of earnings out there, UPL, Canara Bank, Indian Bank, Birla Soft, CG Power, consignado like Paints, Mahanagar Gas and VIP Industries are some of the stocks that will be focused ahead of the quarterly earnings number. But let us get going and discuss some stocks and strategies today with Amar Deo Singh, the head advisory at Angel Broking out there. Good morning.
Yeah, very good morning, Nickey. How are you?
I'm doing good, Amar. The market succumbed to selling pressure on Friday with the benchmark indices reversing all the previous gains to close with 1% down. You think this is a sign of exhaustion from the bull run or breather of sorts?
Oh, I would say that, I would say we did witness some sharp correction last week. But overall, the trend, I would say, looking technically in the charts and even as per the data, I would say that there is still some scope for upside. But for any major up move in the Nifty needs to sustain above the 18,000, I would say 200, 300 band consistently. So what it effectively means is that a lot of short positions would have been built around these levels. And also those who want to go fresh long, they would be waiting for these levels. Technically, these are very crucial and important levels. But looking at the data clearly shows that the short-term trend definitely is up. And what's happening is that in the medium-term trend, now the markets have moved in overbought territory. So that's one of the reasons we are seeing some sort of caution and some sort of selling pressure will come. But I would say on the downside, if I look at Nifty, so the top that it had been in April, so somewhere around 17,800 or so, 17,700, 800, that's going to act as an immediate zone of resistance. So we are seeing some higher tops and bottoms being formed on the daily chart. So that's one positive thing. And also what we are seeing is that there has been a broad-based rally. So that also is a positive because we've seen this rally spreading across different sectors, and also the stocks have rebounded significantly. You'll also need to watch out how Bank Nifty plays out in the coming weeks. As far as Bank Nifty is concerned, I would say somewhere now around 42,000, 42,200, that's going to act as an immediate zone of resistance. And the recent tops which it had made on 4th of May, so that's going to act as a resistance. That's around 43,700, 800. So it could be in a range, but the trend is still in favor of the bulls.
Sure, the trend is clearly in the favor still for the bulls. But, there was a sharp sell-off which was witnessed on Bank Nifty. And you said 42,000 level is something that, probably will get some support on because the sell-off was sharp. 2.5% downtick on Friday. You think this buy on dips opportunity for the market participants out there? And if yes, you did indicate your support level, but what's going to be the resistance level for this one and the strategy that one could be looking at?
Yeah, I would say that if we look at the major indices, one positive thing we are seeing is that in spite of the market rallying significantly, we've not seen some major change in India VIX. So that's around 12. That's around 12, 12.3. So that clearly shows that investors are not that much duly concerned. Had VIX been higher, then I would say the scenario would have been completely different. For any significant rise in VIX, the markets would have to witness some sharp sell-off as we witnessed on in last week. So as far as Bank Nifty is concerned, yeah, one definitely needs to be slightly cautious at these levels, because if you look at Bank Nifty from almost, we've seen the rally starting from March from almost 39,000 levels. So we've seen a very decent rally both on in the major indices, be it Nifty or Bank Nifty. There is some correction which could happen because these are technical levels as well. So on the downside, as I said, Bank Nifty's got very strong support coming around 42,000, 42,200. On the upside, resistance is around somewhere around, if I look, immediate resistance would be around somewhere 43,500, 43,700. So it's going to be a few volatile sessions before the market consolidates. But yes, one needs to be slightly cautious. Why I'm saying that? Because on the daily charts as well as on the weekly charts, the markets are in overbought territory. So that clearly shows that there could be some selling or some profit booking happening in the markets as well. But the broad-based rally which we witnessed, that clearly points out that there's more of a strength or more of a, I would say, positive sentiments as far as the bulls are concerned.
Sure, Amar. We'll just address the top movers of the day and get back to you in a jiffy in that case. In bunch of stocks, we have a number of stocks that we need to address today, including the likes of Coal India, Marico, Britannia, Paytm. All of these companies have typically reported in their earnings. We're going to be talking about it in detail, even private sector banks for that matter. Beg your pardon, public sector banks for that matter. They're expected to be in focus. Bunch of them like Union Bank of India, Bank of India. These are some of the banks out there which have reported in their numbers. But let's actually talk about Coal India numbers out there first. The review that has come in, it's more or less decent set of numbers that we're looking at. With that, CLSA has maintained the buy rating and the target price of around 280 per share. Right now, the stock is trading around 230 levels. So there is some amount of upside coming in on that one. The wage provisioning, essentially, that has impacted the bottom line performance of the company. If you talk about the adjusting the profitability, that's pretty much ahead of the estimates. But CLSA is of the view that e-auction realizations are likely to fall further. This is on account of two things. A, because of the higher domestic coal availability, and B, decline in the global prices. That's something that they'd like to watch out for will be the increase in the FSA prices. Paytm, now that's an interesting one that we're going to be talking about. The numbers are on consolidated basis sequentially compared. And if you talk about how the losses have narrowed down, that's a bit of encouragement out there. Revenue is up by 13% for this one, and the number is coming at 2,333 odd crore. The Bloomberg estimates were, according to that, it's pretty much in line with the estimates. The loss has narrowed down to 129 crore as compared to a loss that in the previous quarter was sitting at around 330 odd crore. So there is a significant narrowing down of losses also. Now the street was working with an estimate of around a number of 200 odd crore, and the number has come in at around 129 crore when it comes to the loss. So that's clearly some amount of positive momentum coming in for Paytm out there. The net losses overall, they've narrowed to 168 crore as compared to 392 crore that was witnessed in the previous quarter of the financial year. Britannia, that's another one that you need to keep an eye out on. Good set of numbers, I would say. Revenue is up by 13% at a number of around 4,023 odd crore, pretty much in line with what the street was estimating. EBITDA up by 46% at a number of 800 crore. Now the street was working with an estimate of around 715 odd crore. So clearly there is a beat coming in on the operational performance of the company. The margins came in at 19.9%, roughly 20% as compared to 16% in the corresponding quarter. The estimate was to an extent of 17.6%. Net profitability also was higher by 47% at a number of 559 crore, and the street was working with an estimate of around 500 odd crores. So you're seeing big amount of beat coming in on that number. Now what Macquarie has to say about Britannia's earning, it has maintained the neutral rating and the target price of around 4,250 rupees per share. The stock is currently trading higher at 4,640 per share right now. If you talk about the overall FY24 sales growth, that is expected to be led by volume. And if you talk about the sales, it's expected to be closer around that high single-digit levels. There is a moderation coming in on the input cost. Inflation limit is expected to limit the realization growth out there. Overall, the company has guided for a flattish EBITDA margin on account of the price cut, which is expected to remain the competitive nature in the industry overall. So these are some of the counters that we'll be keeping an eye out on. Union Bank and Bank of India both have reported decent set of numbers when it comes to the bottom line performance out there. So do keep an eye out on the public sector bank's name as well. But let's address the market opening for you out there. Well, it's a good start coming in after the sharp sell-off that we saw on Friday, which was tracked by HDFC Twins out there. 18,100 level. That's holding up for you with gains of around 0.25% out there for Nifty 50 index overall. Talk about the Bank Nifty index. That's the one where we're seeing some amount of traction. Huge sell-off on Friday, 2.5% down and out. But in today's trading session, it's holding up with gains of around 0.5% out there. So clearly, the support that we're seeing is being lent by Bank Nifty index. So that's the one that you need to clearly keep an eye out and trade a little bit with a bit of a caution out there. FMCG, Britannia and Marico have reported numbers out there over the weekend, and the index right now is trading with gains of around 0.75% out there. Talk about the other sectoral indices. Defensive pack overall has been holding up. Talk about FMCG, talk about pharma for that matter. These are some of the defensive space per se, which are holding up their neck in green for you. Talk about the other sectoral indices, something in the like of IT. That is also up and about with gains of around 0.5% out there. In terms of other sectoral indices that we have, metal index shining bright with gains of around 0.2, 0.25% out there. Coal India has reported decent set of numbers too. If you talk about the adjusted profitability, that's ahead of estimates out there. Auto, 0.75% of gains coming in, or even on that basket overall. If you talk about the other sectoral indices that we have, something in the likes of realty, that is also holding up in gains with more than 1%, close to 1% out there. In terms of the advances and declines out there, advances 19, declines 30 to an extent. So you can clearly see the market breadth right now holding in favor of declines right now. Even if, if you talk about the market direction, it's pretty much positive, but the momentum isn't really broad-based at this point of time. We are looking at more declines coming in as compared to the advances number out there. But let's address the top gainers and the top losers out there for you. I beg your pardon, the number stands revised. Advances 42, declines 8. So that's clearly the number for you, and we are seeing market breadth right now skewed in the favor of positives right now. 42 advances versus 8 declines. The recent data shows on NSE out there. In terms of the top gainers that we have overall on the list, IndusInd Bank, Britannia, Hindalco, that's holding up in green for you. Tata Motors, Hero MotoCorp, HDFC Bank. So HDFC, Twins have clearly made that comeback out there. Britannia has been holding up. Wipro, HDFC and Bajaj Auto. These are some of the top gainers that we have on the list right now. So clearly it's the beaten down name of HDFC, IndusInd and Britannia, which was reported in numbers. They're the top gainers on the list right now. And top of in terms of the Nifty top losers out there, Coal India, Adani Enterprises, Sun Pharma. These are some of the top losers that we have. Coal India has reported a number. Wage provisioning is what is probably weighing down on the bottom line performance of the company. And in terms of that, if you talk about the adjusted profitability, that's ahead of the estimates. But overall, if you look at the wage provisioning, that's probably led to the little bit of disappointment creeping in for the stock. BPCL, Adani Ports and L&T. These are the other top losers that we have overall on the list out there for us. So these are some of the top gainers and the top losers that we have on the list For Marico, let's pull up a chart for that one. What is reported numbers is pretty much in line with what the street was estimating. Revenue was up by 4% out there. And if you talk about the other sectoral gainers, Marico reported pretty much in line set of numbers, top line, even in terms of the operational performance, bottom line. Everything was in favor of what the estimates were suggesting. So no surprise out there, but let's actually also pull up the charts of, public sector banks, something in the like of Union Bank of India, which recorded in, Marico out there. Look at the charts out there. It's up and about with gains of around 8% So revenue is up by 4%. If you talk about the estimates, they were to an extent of 2,253 odd crore. EBITDA was higher by 14%. Talk about the margins at 17.5% versus 16%, and net profitability, that's up by 20% for that one. So Marico is the one that clearly needs to be on your list right now. Well, it's, the numbers look pretty much in line with what the street was estimating. If you talk about the net profitability in terms of even the EBITDA performance for that matter, 393 crore. Okay, so there is a beat coming in on the operational front, right? The number for EBITDA, the operational performance, that's coming at 393 crore as compared to an estimate of around 398 crore. It's not much of a difference out there, but the stock right now, the commentary seems to be encouraging for Marico out there. And in terms of that, the stock is reacting pretty well. Union Bank of India and Bank of India, these are the other ones that we need to keep a close eye out on. Union Bank has recorded in a 93.3% growth coming in on the profitability of the company. And for Bank of India too, if you talk about the profits, up by 123% a year ago period. Union Bank and Bank of India right now, these are the two ones. Well, for Bank of India, it's down and out with losses of around 8% out there. So these are clearly, you can see the stark difference coming in from the financials and the FMCG basket out there. Even HDFC and HDFC twins, HDFC Limited and HDFC Bank at this point of time, they're holding up in green. IndusInd Bank, which was beaten down in blue with losses of around 4.5% in previous out sessions, that's trading higher too for you. Britannia, however, Britannia and Marico, these are the ones that are shining bright for you. But Amar, quickly come in on that one. I'm going to take your view on Marico as well as Britannia before we move on to our fundamental guest for the show.
I would say that Marico, if you look at Marico has been in a consolidation zone between 400 and I would say roughly around 500. So now we've seen a major, I would say, sharp move this morning. But if we look at the charts on the weekly chart, somewhere around 550, 555, that's going to act as a very crucial zone of resistance because that was a top that the stock had made in September and September 2022 and again in June. So that's going to act as a key zone of resistance. If it's able to sustain above 550, 560, then a 10% rally is not ruled out in Marico. And talking about the other stock which you mentioned, Britannia. So if I look at Britannia is on a different trajectory altogether. So the long-term charts are extremely strong for the stock. So this is a buy on dips. The stock, if you look at currently around 46.50, it was consolidating, was unable to breach the 4350, 4400 zone. So that's taken out very comfortably. And if I look at the long-term charts on the monthly charts, which I'm talking about, or the quarterly charts, they clearly show that there is a very strong bullish momentum that is favoring the stock currently. So any pullback in the stock can be used as a buying opportunity. Major support, if I look at the stock, has major support around 4200, 4300 zone. On the upside, the stock can rally towards 4800 levels.
All right, Amar, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. But I'm going to quickly address in the upgrade that is coming for Bharat Forge by Nomura. It's upgraded to buy target price of 929. It's expecting an incremental revenue of around 15 billion by FY25. It's estimated 20% plus margins for the company, and it's maintained that the India medium and heavy commercial vehicle segment will continue to grow around 10 to 5% over the next 2 years, given the view on the commercial vehicle demand out there. There's an upgrade also coming in on Piramal Enterprises by CLSA. So that's also one of the counter that we need to keep an eye out on. Apart from that, Aditya Birla Fashions, that signed in a definite agreement to acquire 51% stake in TCNS Clothing for a sum of around 1,650 odd crore. It's acquiring in 22 to 30 odd % stake from TCNS promoter and acquire up to 29% stake through open offer of at around 503 odd crore. Beg your pardon, 503 per share. TCNS will receive 11 shares of Aditya Birla Fashion Retail for every 6 shares that they hold in TCNS. So do keep an eye out on that swap ratio overall, but it's that time of the show where we address in the entire fundamental story. And, we have a lot to talk about, even in terms of the FMCG, in terms of IT, in terms of basically even the public sector banks out there. So let's bring in our fundamental guest out there, Amisha Vora, Chairperson and the Managing Director at Prabhudas Lilladher Pvt Limited, joins us right now. Good morning there.
Good morning.
Amisha, we've kick-started the fresh week on a good note. And if you talk about the FMCG basket, that's where the traction is coming from. Marico right now is trading higher by 8%. And Britannia too has been holding up after decent set of March quarter numbers. Overall, what do you think about this space? Do you think it still looks attractive given the valuations that they command at this point of time?
2-3 very key trends are emerging. One is that particularly last year this time, most of the FMCG were facing tremendous commodity price pressures, be it palm oil, be it some of the other chemicals, be it copra. So that was putting pressure both on their gross margins as also on their PAT levels. Now, except the rural recovery, which is weak, say in case of companies like Dabur, if you see most of the companies, HUL, Nestle, Britannia, and Marico in particular, have a lot of ease in terms of their gross margin. And volume growth has sustained, particularly if we talk about, say, Marico, some of their newer ventures into food and also into personal care brands have been doing extremely well, and that are giving a very good leg up to their overall growth. So if I see on the whole, within this FMCG basket, we still feel 23 to 25, but for a few hitches in terms of, say, commodity price pressure building into milk and sugar, most of this will produce 17 to 18% kind of a CAGR bottom line growth, which I think is very decent. The valuations are very strong, so one can expect moderate 10 to 12% kind of a growth in these counters is what we feel.
All right, so that's the view coming in on the FMCG basket overall. But Amisha, I'm not sure how closely you track the new age companies. I'm sure we're going to be chatting about the infra and the defense space in just a jiffy. But new age companies, something like a Paytm, last quarter was good set of numbers that Paytm reported. Even if you talk about this quarter, the losses seem to have reduced on operating levels on sequential basis. What's your assessment?
So I very clearly believe that, given the fact that their market caps are truly thrashed and investors have given most of these new age companies a view that better look inward, put your models in place, start generating cash. And all of them, most of them rather, are in that journey. So that is very good. So the pick and choose from within these baskets will be those who have a stronger moat within their segments. So Policy Bazaar is one amongst them. I'm sure Paytm has also reported very strong curtailment in their losses. They are in that journey, and they will continue to walk the talk, is what I believe. So some of these stocks for next 1 or 2 quarters will be watched in terms of how well they change their business model. And beyond that, I think they will start performing really well.
Sure. So Policy Bazaar is where the traction really is lying right now because of the moat that Amisha has been hinting in. But let's also talk about the overall banking sector, the banking space per se, especially the the PSU banks out there. Union Bank of India, both are down and out after reporting fairly decent set of numbers. If you talk about the private sector bank, ICICI Bank did amazing, a splendid job when it comes to the overall top line and the bottom line performance. But what's your assessment? Where is the valuation more attractive at this point of time? And would you still stick to PSU banks right now?
So one is that when you compare in this entire global chaos which is happening in terms of rate crisis impacting the regional banks in US, some of the large European banks folding up with the competition, I think the health of Indian banks is at the best probably in the last 10 years. In terms of both asset quality as also their capital adequacy. So the runway is very clear. And the macro of India, but for whatever little slowdown that we also will feel because of global recession if that sets in and exports getting impacted, our macros are still very good. So we don't fear very large asset quality issues. So banks and financials overall will continue to remain an overweight. Within that, as you very rightly said, that ICICI Bank is doing a phenomenal business. I mean, putting up a great show, and the biggest strength comes from the fact that across any layers of ICICI Bank, within the teams, when you speak, you realize that a very cohesive strategy of client first has been put, so the numbers would be very sustainable. At the same time, the second biggest action which is happening is within HDFC and HDFC Bank, and the kind of reach and cross-selling opportunity it will create, I think will be mind-boggling. So from investments perspective, with a 2 years view, the unfolding which will happen and penetration which will happen due to the merger of these duo will create a lot of value and wealth. So both these continue to remain prime investment recommendations from our house. Coming to public sector banks, I think that the health is improving substantially, both because of the asset quality change and provisions coming down, and very gradually also because they have a huge reach in terms of their deposit base. So some of these companies which are still available at very attractive valuations of in and around 1.10 to below 1 kind of price to book will continue to give a good CAGR for a couple of years before we see any major hitch turning up.
Amisha, what do you like from the PSB banking space, if you could put it in a pecking order?
So Bank of Baroda is one of our top picks within the PSU banks. And SBI, of course, because of its subsidiaries also bring huge value, but Bank of Baroda is our top pick within the PSU.
All right, Amisha, one last question that I will squeeze in here. Completely running out of time out there. You seem to be pretty bullish on the defense space overall. So your assessment on that in terms of the numbers that have come out and yet to be reported. Sure, the order book has been building up even for infra companies because it's a pre-election year out there. What's your assessment on the same?
So I think defense as a sector has really seen a lot of action happening finally post the required policy changes which were underway for last almost, I would say, 3 to 4 years. And once these orders are placed, I feel that the visibility of growth becomes very, very strong as the execution is the only key challenge. So I feel that whether it is the Mazgaon Docks and GSRE and some of those companies, or actually the HEL and BDL, the whole pack, including a lot of positive rub-off will come on Bharat Forge also. The pack will continue to do very well. I see similar traction building into the infrastructure, but within that, the railway order booking also. And that also will have both very positive impact on some of those companies, plus overall on the economy because of the multiplier impact also.
All right, that's clearly the word coming in on the entire defense and the infra space. Amisha, thank you so much for taking out the time and speaking to us early this morning.
My pleasure. Thank you.
You're most welcome. Well, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.